Hey guys, this is a video for a lot of you that have been asking me, they're like, Leonardo, hey, you can certainly turn 5 grand into 15K and 20K and all that good stuff. We've seen you turn, 3 grand into 50K, 100K, whatever. But what about us? Some of us that are literally just starting with nothing. Okay, so that's for those of you guys that are starting with basically nothing. In this particular trading live series, I'm going to show you how to turn 280 bucks into 7,700 in 72 hours. Yes, it does produce a gain of 2,600% plus if you do the math. More than that, I'm going to give you a detailed comparison of advantages and disadvantages trading penny stocks versus options. Now, you probably have seen me trade penny stocks, not as often as options. I do trade them occasionally. I'm clearly specializing in trading options in such weekly options, but I think some of these observations and some of my key summaries could be helpful to somebody out there that is trying to either make a transition from penny stocks to options or maybe trying to make the best of both worlds. So this is just my opinion on penny stocks versus options, my observations over the years. And there's clearly some disadvantages and disadvantages to both, and we're going to dive in and give you all the details on that. So here it is. We're going to start with a live trade first. Hey guys, quick video on how to turn $288 into 5 grand in less than 3 trades. So the first trade we're going to take is we're going to buy some of these BABA puts. Buy 8 of these. 8. 9, 10, 9, 175 puts, expecting a $15 drop by Friday. Today is Tuesday, so I'll be able to buy these. Come on. Okay, done. So we bought 9 BABA puts. The current price is 185.30. We're expecting the stock to drop to about 172 level by Friday in the next 72 hours. So we're expecting a $12 drop in the next 72 hours. Okay guys, quick review on these BABA trades. So 175 puts, we're buying them at 30 cents about an hour ago. Now they are worth $1.30 bid, $1.41 ask, making $949. Not bad considering we only invested in this trade $288. So I've recently talked to a lot of traders that have been asking me questions. Well, how does trading options compared to trading penny stocks work? And so the reason I'm using this example is to kind of bring some light to showing you that with options, if you study the charts and you understand the 13 markets move formula, you can clearly commit very small amounts of capital. As you can see with this investment, I mean, we're making $1,000, so we invested $288, and right now, if I was to close this position, which I don't want to do, we'd get $1,300 back. So, if you'd like to learn more details on how to do this, guys, click the links below, get more information. There's a ton of free resources you can find underneath this video. You're welcome to schedule a coaching call to get more information on how to transition from trading stocks into trading options. So get your questions answered so you can have an awesome trading year. Okay guys, it's May 9th and 48 hours ago we placed this trade on BABA, literally buying these 175 level puts at 30 cents. So our goal is to basically sell them today and lock in the gain. So we've invested 280 bucks in the trade. The market, you just heard the opening bell, and it should be priced at a couple of dollars or higher. And so we should get a pretty decent gain here. And then the goal behind that trade was to show you how to turn that 200 bucks into a substantially high amount, like 5 grand. So that's exactly what we're going to do. Just waiting for these things to open up here.
MPstamps.com dropping under $40 after the open.
Okay, so now the 175s are worth $325, and actually the stock just fallen to 174. So here it is. We're buying them for 30 cents, 9 puts. We're making $2,700. Guys, that's in 48 hours. If you're trying to learn how to swing trade, take the 13 market moves course. Is going to help you catch trades like this. So here it is. We're going to create a closing order right now. I'm going to take it out at 3.5. So we're buying at 30 cents. taking it out at 3.5. Okay, done. Quick math so far, guys. We bought 9 puts at 30 cents a piece, invested 270 bucks in the trade, plus commission, rounded off to 280 bucks. We sold those 9 puts at 3.5 or 350 bucks a piece and collected 31.50 total for the sale of those. Okay, guys, with the money we made on the BABA trade, the next trade we're going to take is FFIV, which is F5 Networks. We're going to buy some of these 145 puts. We're going to buy 50 of them at 50 cents. I'm actually going to have to buy 40 of them. 40 at 50. Let's go. Come on. See, man, they don't want to sell them. Come on. Sell them to me. 30 at 60. 35 at 60.
Applied Therapeutics, one of the IPOs originally scheduled today, did not price yet, and it has been postponed. That's Alpha.
35 at 60. Yes. Okay. So I bought 35 FFIV puts. Now, have paid quite a bit. As you can see, I'm the only one that bought them 35. Nobody else is buying puts. Actually, what they're doing is they're buying. No, nobody's doing anything. Okay, but I am buying, and we own basically 35 puts at 60. I'm going to go ahead and put a closing order. I think it could drop to a level of 140 today, so they could be worth $5. Create closing order. Just going to set these in there. 35 puts at $5. There it is. Done. Handled. Let's go. Okay, guys. 1 hour later, follow up on FFIV. I don't even think it's been an hour, actually. Maybe like 40 minutes. So now FFIV, we're buying it when the stock was 148. It's now at 145.70. We're buying the options, 35 of them at 60 cents. Now they're worth $1.28. That's a $2,397 profit. So this is the second trade. So technically, I could close these out right now and say that, hey, $288 turned into $5K in 2 trades. But the reality is the charts are telling us to stay with this trade. So we're going to keep this trade on. And ideally, I'd like to possibly stay with this trade through tomorrow. So I'm actually going to change the sell order on these instead of $5 where I was setting them earlier, because I don't really want it to get executed today. I'm just going to set it at 6.5. That would only basically get executed if we were to actually fall below 140, so maybe 139 level. So I want to execute this tomorrow at 6.5. That would give us a credit of 22.7. So that would literally mean that we've taken $288 into 22,750 bucks. So we'll see if that's going to materialize. We'll follow up on this trade tomorrow. Okay, the limit order is set. Now they're actually worth 122, 158. So I'm surprised nobody else was buying these puts today, guys. I mean, this is crazy. I mean, this is absolutely crazy. Somebody bought some 150s, 149s. I was the only one that bought 35 of these contracts here. The trade is making 2,800 bucks. I mean, we've invested $2,000 in it roughly, and which is basically 60 times 35. For those of you that are new to trading options, basically when we say 60 cents, okay, you literally spending 60 bucks. Okay, so 35 times $60, and that will put you at about $2,500 for the trade, for the cost of the trade. Now, basically, we've doubled what we've invested in the trade, more than doubled what we've invested in the trade. For those of you that are having a hard time following these numbers, just you can focus right here. So we're buying it for 60 cents. Right now, we can sell it for $1.42. So basically more than double. Okay, so this is how it actually looks on the option chain, right? We're getting close. This is actually my order sitting right there at $1.80 to be executed for 35 of these contracts. So current profit is $35.70. Again, we're buying these at 60 cents yesterday, trying to get it executed at $1.80 for a 300% return. The first trade we took was on BABA, right? Actually, somebody's just undercut me. Somebody's trying to sell them at $1.70. All we need is about a 50-cent drop, 50-60-cent drop to be able to execute this. Getting close. The stock is making new lows for the day, which is a good thing. However, the issue and the reason why we want to cut this trade short instead of waiting for a bigger drop is this lower volume. It's really hesitant to fall. See, it keeps struggling at these levels. So it may not happen. May not happen right this second. Okay, guys, missed a good opportunity to sell while I was getting some coffee. So here it is. It didn't quite hit my limit order. So I'm going to have to take it out at the lower price. I'm going to replace that. I'm tired of babysitting this trade because there's so many other good trades that are just passing me by while I'm waiting on this one. So what I want to do is just get out at 1.3, collect the gains. It's still more than double the money, and just go. Let's do this. Okay, sold. 145 put at 1.3. It's done. Quick math on both trades. So 35 FFIV puts were purchased at 0.6 for a total of 2,100. The same 35 FFIV puts were sold at 1.3, 130 bucks a piece for a total of 45.50. Trade 1, BABA puts, created a total of 31.50. Trade 2, FFIV puts, a total of 45.50. Combined, $7,700 in total credit. Less $280 initial investment produces a net gain, rounded up, commissions plus or minus 20, 30 bucks altogether. So 74.20 net gain, or in other words, a 2,600% plus return in 2 trades, guys. Guys, if you're looking to lock in gains like this and discover trades like this, again, it's very simple. Click the link below. Learn the 13 market moves formula. It will help you. And in this part of the video, guys, if you made it so far, congratulations, because I'm going to give you some very detailed specifics on what, in my view, over the years of trading, what differences I have discovered, advantages, disadvantages, negatives, positives between trading penny stocks and options versus penny stocks. Here it is. Enjoy. I hope this is helpful. Here it is. Penny stocks versus options. Disadvantages. Number 1, unlimited risk when shorting penny stocks. So typically, penny stocks are considered to be super high risk from the standpoint of them ever going higher. Well, the reality is exactly the opposite is true. A lot of people actually trying to bet against penny stocks in the hopes that they will flop and go down to zero. When they're establishing the short position, sometimes they're buying a few thousand shares for $2 or $3 in the hopes that the stock will drop to like $1. So the math is clear here. I mean, they're trying to make 4 to 6K on a couple of dollars in the drop. But there's been many instances, I personally know some people that actually shorted $2, $3 priced penny stocks just to find out that the next day the stock opened up at 10, and it didn't stop there. They thought, well, surely enough, it was going to drop in, from 10 back to, 5 at least, so they can minimize losses. Because at that point, I mean, they're sitting on a $14,000 loss. Well, and guess what happens? It doesn't stop there. Some of these low float penny stocks, they could literally go to the moon. I mean, literally, you could be buying and shorting them in $2, $3, hoping it's going to drop to $1 or nothing. But in reality, exactly the opposite could take place. And in this particular case, your broker is going to want you to deposit the difference because now you're trying to basically invest a few $1,000s to make a few $1,000s. But in reality, now you're sitting in the hole $14,000, $20,000. I mean, there's been instances where $2, $3 price penny stocks opened up the next day at $20, $30, and they kept going higher to $50, $60, $70. So what I'm trying to say and communicate to you guys, that the risks are absolutely unlimited, because when you're shorting, I mean, the stock could go against you exponentially. So not only you're risking the amount that you're investing, but these losses could create substantial hole in your trading account. So it's quite the contrary with options, and we're going to take a look at that in just a sec. So unlimited risk when shorting penny stocks. Number 2, most of the time, just to be able to short any stocks, your broker is going to require an account that they call the margin account. And so basically, margin account, it's going to require a larger deposit than a cash account. And so oftentimes, they will increase whatever you deposit in your account. They'll give you like credit 3-4 times. So if you got, $3 grand sitting in there, they'll allow you to buy stocks, with 9 grand or 12 grand, depending on which broker you use. And there's some crazy stuff that, 5 times, 10 times the money. So it's very tempting when that money is there to actually reach out and buy more shares than what you actually are able to buy with the cash that you've deposited in the account. And so, needless to say, if you're operating with borrowed funds, that does create more risk. Unfortunately, most of the traders that are starting out with smaller accounts, that's exactly what they have to do in order to generate anything. Somebody starts out with $1,000, $2,000, clearly that would be a desirable thing for them, for their broker to triple their buying power, quadruple their buying power. But with that comes the higher risk, because not only you're literally borrowing the money from your broker to place the trade, but especially if you're shorting a penny stock and it goes against you, that's how your losses could skyrocket overnight, okay? And with options, you only trade with basically whatever amounts that you're putting. There's not a broker, as far as I'm aware of, that will let you trade options with borrowed funds. So clearly you avoid the risk of trading with borrowed funds. Now, I'm not referring to some people trying to borrow money on a credit card to put in their trading account. We're just stating a fact here that it does require a margin account for you to increase your trading power, for you to be shorting some of these penny stocks and so on. In most cases, your broker will borrow you the money, but you may not be realizing at what price and cost that could actually materialize for you later in the game. So just most of the time, it's better not to borrow funds for trading. Just use that as a general rule of thumb and you will minimize your risk. So that's a disadvantage, number 2. Number 3, penny stocks have a separate mind from the market. So in other words, generally the markets are dropping and penny stocks are actually going higher. In other words, they have no rhythm or rhyme with the financial markets. And there's multiple reasons for that they trade kind of on their own stuff. There's been multiple times where I've bought penny stocks in the expectation of them moving higher on some crazy lower days in the markets where the markets are crashing 600-700 points. I'm sitting there buying penny stocks and these things are going higher. So they're not heavily correlated to the rest of the financial markets. It is because of their speculative nature. There's a lot of promotion that goes behind these penny stocks, and so if the promoters agreed to move the stock in a particular time frame, it doesn't matter whether overall the markets are moving higher, lower. Penny stocks just don't give a shit. They don't care. And so for that reason, it's actually to trade them on more consistent basis because of their promotional nature. It's a little bit harder to do so in my view. Now, some of you may disagree with that, but it is a little bit harder for me because I generally pay a lot of attention to the correlation. A lot of the things that I observe that are correlated, they're actually helping me put a lot of successful trades together. And so that aspect will definitely be missing when you're trading penny stocks because they're not correlated to the rest of the financial markets, generally. So, number 4, many great opportunities on the short side are actually often missed in trading penny stocks because of inability to borrow shares to short. So oftentimes and there's been so many times, guys, I have identified on the charts using my divergences system, using patterns and so on. I've identified some killer opportunities there, and I'm wanting to short the hell out of the particular stock, and there's no shares available to short. So basically, there's just a lot of great opportunities. So you may be taking a lot of time, looking through, identifying some really good opportunities, and you will find them. With penny stocks, it is actually, if you understand the charts and divergences, you can find some amazing opportunity with penny stocks, but it does not mean that you will actually be able to take advantage of those situations. Now, some traders I know, they do go outside of the United States to set up their accounts on some crazy islands that, are not supervised by the U.S. regulations. Now, typically, some of those places will allow you to short stocks that are not available with typical brokerage accounts like, TD Ameritrade and E-Trade and so on. So there's some ways to go around, but at the same time, they come with a greater cost and disadvantage. And here's what I mean by that. A lot of times, those offshore brokers, okay, they're not 100% by the book, meaning that they will charge the hell out of you. They'll charge you a ton to be able to place those trades. So you're going to be looking at a lot of extra fees, and you're going to be looking at very poor execution with a lot of these brokerages outside of the U.S. that are based in like Virgin Islands, some crazy stuff like that, okay? So be very cautious. You know, if you're determined to make a killing with penny stocks, by all means, go for it. But just be aware that there's going to be some limitations as far as even when you do find opportunities and you're ready to take advantage of them, there may not be an opportunity actually there. So before, you know, spending hours of research and time and putting your, you know, value time into researching these trades, just be aware that just because the opportunity is there does not mean you're going to be able to capitalize on it. Number 5, big buyers' behavior is highly erratic and unpredictable. So in other words, when I'm looking at charts and divergences and I have my process that I use for trading these larger names, you know, there is some really powerful things that I have discovered that help me identify institutional buying behavior on a consistent basis. Now, if I apply the same system to penny stocks, it just doesn't work as good, again, because of the promotional nature of why, promotion and speculative nature of why a lot of these things make big moves. And there's some penny stocks that are just sitting there forever, right? So they don't move. So if you trade in penny stocks, you want them to move. Sometimes these big moves, they do happen because of the promotional nature. So it's very difficult to identify and calculate. And at times you can, but it's going to be, the main issue is going to be consistency here. Penny stocks versus options advantages. There's actually one great advantage, but if you're a trader, it really doesn't amount to a whole lot. So the advantage is that clearly when you are holding shares, you can hold them for as long as you want. You can hold them for 6 months, a year, you know, 5, 10 years, 20 years if you wanted to. Most of the penny stocks, trust me, they don't stick around for that long, okay? So there's very little value in that. And especially, you know, if you're a trader, right? If you're a trader, if you're looking to make a profit today, if you're looking to make a profit this week, you know, by staying in the position maybe for an hour or a couple of days on a swing trade or maybe 3 or 4 days, you know, clearly you shouldn't really care about holding the shares. I mean, if that's the case, just be an investor, buy a quality stock and hold it forever. But we're talking about trading on this channel, and so this video, disadvantages, advantages, are designed to talk about things from the trading perspective, from you being able to generate money every week. So yes, you can hold the shares, but from the trading standpoint, it's not going to be very desirable or profitable. And clearly, as a trader, penny stocks, they move like crazy sometimes, which is, in one side, is a great desirable thing because that's how you make the money. But at the same time, you can literally go get a cup of coffee. Like, I like to drink coffee, so I'll go get a coffee. And there's been instances where, you know, I just missed it. I mean, I was getting coffee, making coffee for a few minutes. I come back. And it does happen to me with options too, right? I mean, but as you can clearly saw in this, you know, FFIV trade, you know, I missed it. I missed out literally like extra $1,000 of profits where I'm making my coffee. That's why I called it the expensive coffee there. But the point is this. With penny stocks, though, if on options, you know, I can miss a move and come back, and if I really wanted to stay a little bit longer with FFIV, actually, it did drop to like 143 that day, so I could have closed out at a much better price. But once penny stocks drop, so say penny stock goes from like $1 or $2 and it builds momentum, it goes out and maxes out like 8, that drop back to 1 could happen literally within minutes. So if you miss that, you know, good luck, because from that point, from a penny stock going from $1 back to 8, it could take years. Because once the promoters are done, they're done. Very risky situation if you're not glued to your screen pretty much the entire time. And with options, it's not so, because when dealing with higher priced stocks, like you can miss out maybe on some ideal exit and entries, but you're not going to be in a situation to the point of whether there's like no return on your trade. just kind of like in this example I described, where something builds the momentum, goes high, and then it just loses everything. And the issue is, with larger stocks, they can bounce back, but with penny stocks, once they're done, they could stay at these low levels forever, and you could be waiting forever to just try to get some of that money back. So if you're planning on holding shares for 5 years, you know, because at some point you hope the stock is going to get revived, I mean, that's fine. But if you're a trader, they're just going to wipe out a lot of your account, and it's just going to be a very difficult situation for you to make a comeback from there. So requirements for trading success, trading penny stocks, to me, it can be summarized in 3 things. So number 1, understanding key charts and behavioral patterns is definitely highly desirable, because that will help you find some really good penny stock trades. And that's how I've discovered most of the penny stock trades that I've ever taken that have produced good results. Number 2, you got to be familiar with the psychology of trading. And if you're struggling with that, it doesn't matter what you trade. You can trade commodities, penny stocks, cryptos. Like, you just got to deal with that. You got to address that. We have some courses that can help you establish a process that could help the psychology of trading make a piece of cake for you. And now, at times, there's still going to be challenges. You're not going to be ever able to nail the psychology of trading 100% of the time, but understanding some key things and having a good process will definitely help you. So if you're interested in doing that, click the links below, get more info. Now, and third, you know, I know some guys that have traded penny stocks successfully at times, but then they go for these phases to where there's just nothing. There's just nothing out there. It boils down to luck, okay? With a lot of them that I know are doing it, like, it really boils down to luck. And so to me, I don't want to be gambling. I don't want to be lucky. Okay, I want to have a calculated outcome whenever I go into the trade. And sometimes I'm going to be right, and sometimes I'm going to be wrong. But it's based on calculations. It's not based on what the promoters are doing out there. It's not based on, you know, oh, there's just a huge short squeeze on the slow float. And you know, it's a totally different ball game. And most of the guys I know that have made a ton of money with penny stocks, they only done so on occasion, and they have a very difficult time actually duplicating it again and again. If you've been watching our channel here over the course of the last year, you've seen me take these option trades day in, day out, showing you guys how these 300, 400, 500% returns, they could be consistent. You can find these trades in any type of market environment. You know, buying calls or buying puts, you know, yes, you have to have a strategy. You have to have a better understanding of what's going on out there. But you can do it with a much greater consistency without relying on luck, bottom line. Now, options versus penny stocks, advantages. Guys, limited risk. I know what you've heard is totally contradictory to what I'm about to say, but with options, you actually have limited risk, because you can only lose what you actually invest in a trade. If, for example, you're shorting the penny stock and your broker gives you a 3 to 4 times the leverage, I mean, you could easily lose way more than what you're actually initially placing into the trade. So, as an example, in a live example I was showing you, when I was utilizing $280 to place that BABA trade, well, the worst outcome that could possibly ever happen is the fact that I would lose that $280, okay? But you saw what is actually possible to make with investing $280. And I don't know any penny stock traders that have invested $280 to turn it into $3,000 within 48 hours, you know, with exceptions of maybe just a few lucky cases. But with options, yes, you can calculate, you can actually do it on consistent basis. You can find trades like that. As a matter of fact, I got another video somewhere out there that's like $600 to $8K, where I show you specifically how, again, I turned a smaller amount into a much higher amount utilizing options. So if you haven't watched that video, feel free to check it out, learn some more stuff there. Now, you would never be trading with leverage when you trade in options. You would never be trading with borrowed funds. From that standpoint, that does equate, in my view, to less risk. You're not borrowing money to place your trades. Number 3, it allows you to trade alongside institutional investors where big money is made. And so You want to follow the big money, guys. And if you can identify some of these traits, which I can clearly point out to you on the charts. So it starts with understanding charts, patterns, but more importantly, not just the charts, but the charts divergences where certain things point out to a completely entirely outcome with most of the participants are witnessing yet. And by catching these reversals, noticing that initial institutional behavior either start distributing the stock or accumulating the stock, that's how you can catch some really powerful trades with options by really paying attention to institutional investors. And we can identify it with very high level of consistency. And it allows you to participate. The math just works better when you're looking at options, when you trade higher priced stocks. And institutions, they prefer higher priced stocks. So not many individual investors trade stocks that trade maybe for $400 or $500 a share, $1,500 a share, $2,000 a share. But that's really where you will make a ton of money with options if you understand how to do the calculations. So advantage 4 is highly predictable behavior in higher priced stocks. Once we identify the institutional behavior on the chart, we can follow it, we can stick with it, and we can produce highly repetitive outcomes. Number 5, high correlation with indexes and markets. They allow us for more consistent strategies for profit. So we have certain rules and guidelines that we follow to establish some of those things. And so if you guys are curious to learn more about them, again, click the links below, get more information. So the correlation, everything in the markets is correlated. How does the price of dollar versus euro is going to impact, price line earnings? I mean, that's a very easy example, right? And if you understand how to trade that, you can trade BKNG, a price line earnings, utilizing options. So everything in the market is correlated, starting with the price of copper, as I've been given recently in some of the recent videos and examples, and how that could impact the markets. You can, take some really good measurements of the VIX and establish guidelines on when to utilize the call strategies or put strategies and so on. So it's the correlation and being able to identify these correlations between different sectors, different individual stocks, commodities, cryptocurrency, and so on. They create an enormous amount of opportunities for you that you're not able to actually tap into and utilize with trading penny stocks. Number 6, it's never a problem to actually short a stock utilizing put options. Okay, you can actually use some other option strategies, but you would minimize your risk because, again, with options, you can only lose what you invest in a trade and never more than what you actually invest in a trade. So it actually is a much better way to short stocks utilizing put option strategies compared to actually shorting the stocks themselves. Number 7, the biggest fortune, if you really go out and you study the markets and you study some of the most successful traders, to me, a successful trader, anybody that has made over $1 billion in trading, not in investing, not Warren Buffett kind of stuff, buy, hold forever kind of thing, but I'm talking about traders that has profited substantially from short-term market movements. And if you study, what you will find out, these traders unanimously made their money on actually utilizing put options and shorting the markets, utilizing put options when the markets were dropping. So maybe you're a beginning trader, maybe you're just all of this trading stuff is new to you, but just there's one basic rule that no matter how brand new you are to trading, you should very easily understand. Stocks drop much faster than they climb. And since with options, we're targeting a specific time frame based on the calculations, since with options, we identify a specific time frame, then the quicker the move happens, the more money you will make. So if you get good with understanding charts, divergences, and patterns, and you get good at figuring out a specific time frame and when that move is going to happen, this is the ultimate holy grail of making money in the markets. Because the put options, again, they benefit tremendously from short-term moves to the downside, and all you have to do is get the skill to understand when that happens. See, most of the traders, they just, they're naturally bulls. They're not contrarians. They see the market in the green. What do they want to do? They want to buy calls. Well, what happens by the end of the day? Well, the market turned around and it's negative now, so are they making money? No. So it's just, if you've got to get better than just the basic stuff if you guys want to be successful with this. And I'm just saying that options, especially understanding when to short stocks, utilizing put options, create tremendous opportunities that you would never have an issue actually taking advantage of profiting when markets drop. And considering the markets are at all-time highs, I mean, what better opportunity do you need? You know, you want to short the markets at their all-time highs while the sentiment is still rather bullish out there. Eighth advantages. Following big institutional money is a simple strategy anyone can use with options. See, many people think like options are so complicated. Well, in reality, they're not. You just got to do a few basic things and follow the big money. And thank God it's actually quite easy to figure out these big institutionals' money because it's where they're going. Because it's really hard actually for them to hide it. If you know where to look in the chart, you're going to be able to find it. And next is many more opportunities will be actually available to you each day in the higher price stocks in various sectors than in penny stocks. Institutions, they don't clearly trade penny stocks. Very few exceptions out there. So they focus on, the higher price stocks. It costs them less than commissions to buy the higher price stocks. Certain of them have certain requirements. A lot of, funds, they're bigger funds. They have certain guidelines they follow. Most of them, they will not touch a stock unless it's above 10 bucks. And most of the time, what I've noticed is, people want to only trade penny stocks just because their account is not big. And they think they got to buy these stocks for $1, $2, $3 because the math is simply buy 1,000 shares at $2. That's cost you, $2,000. You sell them when the stock hits $3. But oftentimes, that's not what's going to happen. They're going to buy the stock for $2. It's going to drop back to $1.50. They're going to lose $500. Okay, but they're putting the entire $2,000 at risk, though. That's the point. So it would have been much easier for them out of that $2,000 to use $200 and place one option trades, and that would give them multiple opportunities to get it right. And if you target a higher percentage return, then the math works. The math doesn't work when you try to target opportunities of like 10, 20%. 30%, the math does not work because for every trade that you're going to take that's going to be a 10, 20% gainer, you stand a chance to take another trade that's going to be, 30 or 40 or 50% loser when you're dealing with penny stocks. So the math just doesn't work as good with penny stocks, but with higher price stocks, you will have a ton more opportunity to trade these markets in all kinds of ways. In many instances, traders don't realize that it actually requires less capital to start trading and generating substantial gains with options than it does with penny stocks. And again, for the same reason, somebody starts out with a few $1,000s in their account. They're just drawn to penny stocks because they're looking at it and they see how many shares they can buy. And in their mind, many shares equates to bigger profits, which is not true. In many cases, I've shown you videos on this channel where I literally just buy one option for a couple of thousand, and by the end of the day, it's worth $4,000, $5,000, $6,000. So sometimes in the game of trading, it's not about the quantity, but it's about the quality of the trade. There are instances where you definitely don't want to buy stuff out of the money, and you want to just stick to just buying one or two options closer to the money, in the money, and they will generate much greater results. Now, there's clearly some instances when you do want to buy a bunch of options out of the money, just as was shown in the case with the first trade I took in this live video when I was buying BABA puts out of the money. But there were certain conditions, certain calculations that I arrived at in order to place that trade. So clearly, don't just go out there and buy a ton of options out of the money because generally it is going to increase your risk when trading options. But bottom line is, you saw it didn't take much, a couple of $100s to turn into a substantially higher amount. And you are only risking again what you invest in the trade. 11, options offer much higher returns on a more consistent and predictable basis. Guys, I'm not going to talk a lot about this. I've showed you the percentage returns you can get here. Can you get those with penny stocks? I believe in certain instances you can. However, it could be this one opportunity, once a year. That sort of thing. So if you're looking for consistent opportunities with higher returns, then in my view, options is definitely the way to go. And number 12 is, I think, when you calculate the risk reward, right? So when you trade with borrowed funds and you're buying excess number of shares, what you're really putting to get the same results as I've just showed you in this live video with options, you may need to put $10,000 at risk and have a position where maybe you're carrying, 3,000 shares at 3.3 average cost. Okay, you may have to tie up 20,000 in order to produce gains of what I've shown you in this video with options, with just being able to do so with options, just a couple $100. So when you look at the risk reward, it's not just about, okay, how much do you make, but how much capital do you actually put at risk? And in case with stocks, that number is always going to be higher. So if you're looking to produce substantial returns but minimize the risk, I think options, it creates the best opportunity really out there for traders. Now, basically, trading options, to summarize everything, allows the trader to target higher returns with a lot less risk. And especially for those of you that are trying to understand, how do I buy these options so cheap? Guys, this is a simple answer. They're weekly options. They expire this week, so I can actually literally buy some options on Thursdays or Fridays. Some huge names like Amazon and stocks that trade above $1,000 for literally just a couple of $100. Now, if you buy them on longer time frames, they cost thousands of dollars. So if you're trying to figure out how you can do this, how you can learn more, guys, it's not easy, but it is possible. And I've shown you on this channel that you can do it again and again and again in various market environments. So if you're trying to go for these crazy gains that I've shown here, the answer is weekly options. I think they work like penny stocks on steroids times 100. So requirements for success, trading options. Let's touch upon that real quick so I can be clear. Again, it is not easy, but it is possible. Okay, number one, it requires understanding of charts, behavioral patterns. It definitely requires understanding of divergences. Okay, number two, you have to understand how institutional behavior looks on the chart to be able to take advantage of it. Number three, understanding on how to utilize VIX to match the appropriate option strategy with the current market environment. Number four, clear knowledge of 13 markets move formula to understand when you should be day trading and when you should be keeping your positions overnight. That's a definite must. Number five, understanding market correlations. Number six, have a specific process to generate trading ideas using correlations and divergences. And of course, if you want to get extra good at anything in life, guys, okay, this is not a get-rich-quick program by no means. It does anything that's worth doing in life, guys. It's not gonna be easy, okay? So it's gonna require mental and monetary commitment. It's gonna require dedication and persistence. So if you think you can just come in and place a few options trades and make 7-8 grand, it doesn't work that way. I want to be 100% clear about that. But this is a video for those of you. Understand that it's not going to be easy, and it's going to require some ammunition, some tools, some knowledge, and some persistence and consistency to get this done. So in other words, it's for those of you that don't wish it was easier, but wishing that you guys became better so you could do this. And if that's your answer, if that's the way you look at things, then if you're up for the challenge and you want to get better, yes, we can help you. Now, unfortunately, all of our live events are currently sold out, but you could save a ton by studying and learning our proprietary material at the comfort of your home. You're welcome to visit tradingoptionslive.com for more information. You can find the link somewhere below this video where it says show more. There's probably a link right under that video, but there's going to be more links under the video if you just click show more, and you'll be able to find a link. We can actually schedule a free 20-minute coaching call with myself or a senior trader here, and you can ask any questions about trading, any questions about trading stocks, options, whatever is on your mind. You definitely want to get answers to those questions so you can be more prepared to trade the markets tomorrow. Guys, with that said, I wish everybody an awesome trading week. I wish everybody to set some records trading, and I wish for everyone to have the best trading year they've ever had in 2019. I'll catch you guys on the next trade.